Welcome to Morris Financial Hub. In a world where financial stability feels increasingly elusive and traditional investment paths are fraught with uncertainty, many savvy investors are searching for alternatives. They're looking for opportunities that are not just profitable, but predictable, secure, and backed by a solid legal framework. We are your trusted guide on this journey, dedicated to demystifying the world of tax lien investing across all 50 states. Our mission is to provide you with the clear, comprehensive, and actionable knowledge you need to navigate this specialized market with confidence. Before we dive into the specifics, let's address the stark investment reality facing Americans in 2025. The landscape has become a minefield. Traditional savings accounts, once the bedrock of financial prudence, now offer returns that are dwarfed by inflation, with an average savings rate hovering around a mere 0.5%, while inflation consistently erodes purchasing power at over 6% annually. Every dollar you save is actively losing value. Your money is working against you. Many turn to the stock market hoping for growth, only to be met with gut-wrenching volatility. The unpredictable swings throughout 2024 have not just stalled growth, they have actively damaged retirement accounts nationwide, forcing many to reconsider their financial futures. The dream of a comfortable retirement has, for some, become a source of anxiety. And what about real estate, the classic pillar of wealth creation? Sky-high prices and prohibitive interest rates have created a formidable barrier to entry, locking an estimated 73% of potential homebuyers out of the market. This environment makes traditional property investment more challenging and capital-intensive than ever before. Amidst this challenging climate, there is a powerful, often overlooked opportunity. An investment vehicle that operates independently of Wall Street's whims and the housing market's volatility. Today we turn our focus to the state of Wyoming, a place that holds a remarkable secret for disciplined investors. We are here to explore Wyoming's tax lien certificates. These instruments offer the single highest guaranteed statutory return in the entire United States, a remarkable 15% annually. Let me repeat that because it's crucial. A legally mandated 15% annual return. This isn't a potential return or a projected return. It is the fixed rate of interest applied to the lien. This isn't speculation. It's not about timing the market or picking a winning stock. This return is firmly anchored in the bedrock of Wyoming state law, specifically within Title 39 of the Wyoming Statutes, which governs taxation and revenue. This legal foundation provides a level of security and predictability that is virtually unmatched in the modern investment world. The government isn't just a referee here. It's the entity that establishes and enforces the rules that guarantee your return. So, what exactly is a tax lien? Let's establish a clear foundation. When a property owner fails to pay their required property taxes, the county government doesn't immediately foreclose on the property. Instead, to recoup those missing funds needed for schools, roads, and emergency services, the county places a legal claim, a lien, against the property for the amount of the unpaid taxes. They then sell this lien to an investor at a public auction. It is vital to distinguish a tax lien from a tax deed. In a tax deed state, you are buying the property itself. In a tax lien state like Wyoming, you are not buying the property, you are buying the debt, the tax bill itself. You are essentially stepping into the shoes of the county, and the property owner now owes you the back taxes, plus a significant amount of interest. In over 95% of cases, the property owner will eventually pay this debt. This process is called redemption. When they redeem, you, the investor, receive your initial investment back, plus the high rate of interest guaranteed by law. Throughout this guide, we'll use some specific terminology. The certificate of purchase is the official document you receive proving you own the tax lien. The face amount is the initial cost of the lien, which includes the delinquent taxes, penalties, and any associated costs. And the redemption period is the specific time frame the property owner has to pay you back before you can potentially acquire the property. In Wyoming, this is a generous 4-year period. giving the owner ample time to resolve their debt. Now let's talk about the power of that 15% return. In Wyoming, the interest isn't just 15% annually, it's also compounded. This means that each month, interest accrues, and the following month's interest is calculated on a new, slightly larger principal. This compounding effect, even over a short period, can significantly enhance your overall return, creating a powerful engine for wealth accumulation that is both passive and predictable. You might be wondering, why is this opportunity so prevalent now? The same economic pressures affecting investors are also impacting homeowners. Rising costs of living, job instability, and other financial hardships mean that, unfortunately, more people are falling behind on their obligations. Property tax delinquencies have been steadily rising across Wyoming. In 2024 alone, over 1,200 properties entered tax default across the state. This isn't a statistic we celebrate. It represents real families facing real challenges. However, it also creates the inventory for the tax lien system, a system designed to keep communities funded while giving property owners a long window to recover, and providing investors with a secure, high-yield return for bridging the gap. This comprehensive educational guide is your complete roadmap. We will leave no stone unturned. By the time we conclude, you will understand precisely how Wyoming's system works, from the legal statutes to the auction floor. You'll learn how to conduct due diligence, how to analyze different counties to find the best opportunities, and how to manage your portfolio for maximum, predictable returns. We will walk you through the money mechanics, the auction process, and what happens in both scenarios, when a lien redeems, and in the rare case that it doesn't. This is your opportunity to step away from the volatility and uncertainty of traditional markets and into a world of structured, statute-backed returns. Let's begin your journey into the lucrative and secure world of Wyoming tax lien certificates. In every county across America, a fundamental civic duty exists: the payment of property taxes. These funds are the lifeblood of our local communities, financing schools, emergency services, and infrastructure. But what happens when a property owner fails to meet this obligation? In the state of Wyoming, this delinquency doesn't just create a problem for the county, it creates a unique and structured investment opportunity. Each delinquent property tax bill can be transformed into an instrument known as a tax lien certificate. For the educated investor who understands the process, these certificates represent a powerful vehicle for generating passive income, secured by the underlying real estate itself. Before we proceed, it's crucial to understand a foundational concept in this field: the difference between a tax lien and a tax deed. In a tax deed state, the county seizes the property for non-payment of taxes and sells the property itself at auction. The winning bidder becomes the new owner. This is a strategy focused on acquiring real estate. Wyoming, however, operates as a tax lien state. Here, you are not buying the property. Instead, you are paying the delinquent taxes on behalf of the owner. In return, the county gives you a tax lien certificate, which is essentially a claim, or lien, against the property for the amount you paid, plus a legally mandated high rate of interest. The primary goal is to earn that interest when the property owner redeems the lien by paying you back. This system serves a vital public purpose. It provides counties with an immediate and reliable mechanism to collect delinquent revenue, ensuring that public services continue to operate without interruption. By stepping in to pay the taxes, investors provide the liquidity the government needs, and in exchange, they are compensated for the risk and the use of their capital. It's a symbiotic relationship where the county gets its funding, the property owner gets more time to settle their debt, and the investor has the potential to earn a significant secured return. Yet, despite its potential, the world of tax lien investing remains largely unknown to the general public. The challenge is that most investors have never heard of tax lien certificates as an investment vehicle, often perceiving them as complex or reserved for institutional players. This lack of awareness creates a knowledge gap, and where there's a gap, there's often misinformation and costly errors. Those who have heard of tax liens often make three critical mistakes that can cost them thousands in potential returns, and in some cases their entire principal investment. First, they fail to perform adequate due diligence, buying liens on worthless or problematic properties. Second, they misunderstand the specific rules and timelines of the auction and redemption process, leading to forfeited rights or penalties. And third, they miscalculate the true potential return, ignoring factors that can impact their bottom line. This comprehensive educational guide is designed to bridge that knowledge gap. We will provide you with the foundational understanding and step-by-step processes needed to navigate the Wyoming tax lien landscape with confidence. Our goal is to help you avoid those costly mistakes through proper education and preparation, empowering you to make informed decisions. Now, before we delve deeper, it is essential that we address the legal realities of this investment. Important disclaimer: this content is for educational purposes only and does not constitute legal, financial, or investment advice. Tax lien investing involves significant risks, including the potential for a partial or total loss of your invested capital. The value of the underlying property can fluctuate, and redemption is not guaranteed within any specific time frame. Every investor's situation is unique, and the laws governing tax sales are complex and subject to change. Therefore, it is imperative that you always consult with qualified professionals, such as a financial advisor and a real estate attorney, before making any investment decisions. They can help you understand the risks as they apply to your personal financial situation. With that important understanding in place, let's explore why Wyoming stands out. While many states offer tax liens, Wyoming operates as a tax lien state with a unique combination of statutory advantages that make it arguably the most favorable jurisdiction for this type of investment in America. These advantages are not based on opinion, they are codified directly into state law, providing a clear and predictable framework for investors. The first and most compelling advantage is found in Wyoming Statute 39-13-118. This law mandates a 3% penalty on the face value of the lien, paid immediately upon redemption, plus a guaranteed interest rate of 15% per year. Let me repeat that, 15%. This is the highest guaranteed statutory interest rate for tax liens in the entire United States. This isn't a potential rate or a biddable rate that can be driven down to near zero by competition. It is a fixed, legally mandated floor on your annual return if the lien is redeemed. The second powerful advantage is how this interest is calculated. The statute specifies that this 15% annual interest compounds monthly. This is a critical detail that significantly accelerates your returns. Unlike in states where interest accrues only annually, in Wyoming, your investment earns interest on your principal on the previously accrued interest every single month. Over the life of the lien, this monthly compounding effect can substantially maximize your total returns compared to a simple interest or annual compounding structure. To navigate this landscape, you must be fluent in its language. Let's define a few key terms. The face amount is the initial cost of the tax lien certificate, the sum of the delinquent taxes, penalties, and any associated costs you pay at the auction. Redemption is the act of the property owner, or another party with interest in the property, paying off the full debt. This includes your face amount, the initial 3% penalty, and all the accrued 15% interest. When you purchase a lien, you receive a certificate of purchase. This is your official, legally recognized document proving your ownership of the lien and your right to collect upon redemption. Understanding these core terms is the first step toward mastering the process.